get ready, crypto enthusiasts, because the news cycle is absolutely exploding, and you need to be in the know. We're diving headfirst into a whirlwind of groundbreaking developments that are reshaping the future of digital assets. From cutting-edge security strategies that sound like they're straight out of a sci-fi movie to game-changing payment solutions that could unlock mass adoption, this episode is packed with the insights you can't afford to miss. We've got the inside track on how nations are fortifying their digital reserves and how new ventures are aiming to bring crypto into your everyday wallet. Plus, we're dissecting the forces that could send valuations soaring to astronomical heights and how traditional finance is integrating with the digital frontier like never before. Buckle up, because this is Bitcoin Bulletin, and we're bringing you the absolute must-know updates that are making waves right now. First up, we're exploring a nation's bold move to secure its Bitcoin reserves against future threats, employing strategies that are as innovative as they are essential for long-term digital asset custody. This is a deep dive into proactive security in the age of evolving technology. Then, we're shifting gears to look at a presale opportunity that aims to revolutionize crypto payments, potentially offering that next big chance for early adopters. Could this be the solution to everyday crypto spending that we've all been waiting for? We break down the technology and the tokenomics. And we're not stopping there. We'll also be examining the powerful supply and demand dynamics that analysts believe could propel Bitcoin to $1 million valuation, and how institutional players are leveraging new financial products to gain exposure to this digital asset. Don't just follow the market, get ahead of it. Hit that subscribe button, ring the notification bell, and let's get started. El Salvador's digital fortress, a quantum leap in Bitcoin security. El Salvador is making headlines again, this time not for its groundbreaking adoption of Bitcoin as legal tender, but for a sophisticated enhancement of its national Bitcoin reserve security. In a move that signals a proactive approach to safeguarding digital assets, the country has meticulously transferred its reserves from a single, consolidated address into a multitude of new, previously unused addresses. This strategic redistribution, overseen by the Bitcoin Office, is designed to bolster both immediate security and long-term custody, while simultaneously preparing for the potential future threat posed by quantum computing. The technical backbone of Bitcoin, like most modern digital systems, relies heavily on public-private key cryptography. This system, while robust against current computational capabilities, faces a theoretical vulnerability: quantum computers. These advanced machines, when equipped with algorithms like Shor's, could potentially break the encryption that secures digital assets. In the context of Bitcoin, once a transaction is broadcast, the public key associated with an address becomes visible, creating a window of opportunity for sophisticated attacks before the transaction is fully confirmed, and the private key is no longer exposed. El Salvador's strategy directly addresses this by distributing its holdings into smaller, more manageable segments, with each new address holding a maximum of 500 BTC. Addresses that have never been used are particularly secure because their public keys remain hashed and hidden, rendering them immune to the types of attacks that could exploit exposed keys. This significantly limits the exposure period, offering a critical buffer against any unforeseen advancements in quantum computing. Previously, El Salvador opted for a single, reused address to demonstrate a high level of transparency with its Bitcoin holdings. While this approach showcased openness, it also meant that the associated public keys were continuously exposed. This continuous exposure, in theory, provided potential adversaries with an extended timeframe to attempt breaches. The new strategy cleverly circumvents this risk by implementing a public dashboard that can monitor multiple addresses simultaneously. This ensures that the commitment to transparency is not only maintained, but enhanced, without sacrificing the crucial security benefits of avoiding address reuse. This dual approach highlights El Salvador's commitment to being at the forefront of digital asset management, balancing the need for open accounting with state-of-the-art security protocols. It's a clear demonstration of how nations managing significant digital reserves must adapt and innovate, integrating cutting-edge security measures to protect national assets against both present and future technological challenges. This move reinforces El Salvador's pioneering role in sovereign Bitcoin adoption and sets a precedent for how other nations might approach the secure management of digital treasuries in an increasingly complex technological landscape. Hold on tight, because the digital asset world is constantly evolving, and we're tracking every critical development. Next, we're diving into a presale that promises to revolutionize how we spend our crypto. SpacePay presale, your next shot at crypto payment revolution. In the fast-paced world of cryptocurrency, the story of missing out on early Bitcoin gains is a familiar tale of regret for many. Today, however, a new opportunity is emerging, aiming to capture that same spirit of early adoption, but focused squarely on the future of digital payments. SpacePay is launching its presale for the SPY token, presenting a compelling proposition for both investors looking for the next big breakthrough and everyday users seeking seamless crypto payment solutions. The project's core mission is to make spending cryptocurrency as effortless as using a traditional credit card, while simultaneously offering token holders a direct stake in the growth and success of this innovative payment ecosystem. The current reality for crypto payments is fraught with friction. Most businesses hesitate to adopt cryptocurrencies due to perceived complexity, volatility, and high transaction fees. For users, spending digital assets often involves cumbersome processes, slow settlement times, and the uncertainty of whether a merchant will even accept their preferred currency. Merchants, in turn, face the risk of their earnings depreciating in value before they can convert them into fiat currency. SpacePay aims to dismantle these barriers by creating a bridge between the crypto and traditional payment worlds. Its software is designed to integrate directly with existing point-of-sale (POS) systems, allowing customers to pay using any of over 325 supported cryptocurrency wallets. Crucially, merchants receive their payouts instantly in their local fiat currency, eliminating volatility risk and simplifying their operations. This seamless integration means the payment experience for the end user is virtually identical to a standard card transaction, but with the added benefit of spending digital assets anywhere. The technological architecture of SpacePay is built for seamless integration and efficiency. Merchants do not need to invest in new hardware. Their existing POS terminals are fully compatible. The transaction fee is set at a remarkably low 0.5%, significantly undercutting many existing crypto payment solutions. This cost-effectiveness, combined with instant fiat settlement and no integration costs, presents a substantial advantage for businesses. For consumers, it unlocks the freedom to spend their digital assets directly, bypassing the need to convert to fiat beforehand or worry about merchant acceptance. This could be a pivotal step towards the mass adoption of crypto payments, making digital currencies a practical tool for daily commerce. The system emphasizes decentralization, aiming to minimize reliance on intermediaries that can introduce delays or additional costs, thereby ensuring swift and secure transaction settlements. The SPY token is the engine driving the SpacePay ecosystem, designed to provide tangible value and utility to its holders. Participants who hold and actively use SPY are eligible for monthly loyalty airdrops, a reward mechanism that encourages ongoing engagement. Furthermore, SPY holders gain governance rights, allowing them to influence key decisions and shape the future development of the SpacePay platform. Benefits extend to early access to new features, a share in the platform's revenue as it expands, and even the option to direct a portion of their rewards to charitable causes, which SpacePay matches. Regular quarterly webinars with the project's leadership team ensure that token holders remain informed and connected to the project's roadmap and progress. This multifaceted approach to token utility is crafted to foster a strong, engaged community and ensure the long-term viability and success of SpacePay. The current presale phase offers an attractive entry point, with each SPY token priced at 0.003181. Over $1.3 million USDT has already been raised, indicating significant early investor interest. With a total supply of 34 billion tokens allocated strategically for growth, community incentives, partnerships, and development, the tokenomics are structured for sustainability. Investors can participate by connecting a compatible wallet, such as MetaMask, funding it with various cryptocurrencies like ETH, BNB, or stablecoins and swapping them for SPY. Tokens purchased can be claimed directly in the wallet prior to the initial exchange listing. What truly sets this presale apart is its grounding in real-world utility. Unlike speculative tokens, SPY is intrinsically linked to a functional product designed to solve a genuine problem in the massive global payments industry. As crypto ownership grows and more people seek to spend their assets, SpacePay is strategically positioned at the intersection of these trends, mirroring Bitcoin's initial success in addressing fundamental financial needs. This venture into practical crypto utility is fascinating, but the market's potential is always expanding. Now, let's look at the forces that could be driving Bitcoin towards an unprecedented valuation. Bitcoin's million-dollar trajectory, a supply-demand imperative. As the digital asset landscape continues its rapid evolution, the conversation around Bitcoin's long-term potential frequently circles back to a singular, ambitious prediction: a valuation of $1 million per coin. This isn't mere speculation. It's a forecast rooted in fundamental economic principles, particularly the interplay of supply and demand, amplified by the unique characteristics of Bitcoin as a scarce, digital asset in an increasingly digital world. Understanding the forces driving this potential ascent requires a deep dive into Bitcoin's inherent properties and the macroeconomic shifts that are increasingly favoring assets like it. At its core, Bitcoin's value proposition is built upon scarcity. With a hard-coded maximum supply of 21 million coins, Bitcoin is inherently deflationary, a stark contrast to the inflationary nature of most fiat currencies. This fixed supply means that as demand increases, while the supply remains constant or even decreases due to lost coins, the price per unit must logically rise. This supply-side constraint is a critical factor that sets Bitcoin apart from traditional commodities and financial instruments. The decreasing issuance rate, dictated by the halving events approximately every 4 years, further exacerbates this scarcity, making newly mined Bitcoin progressively harder to obtain and thus more valuable. The next halving is anticipated to further tighten the supply, potentially acting as a significant catalyst for price appreciation. The demand side of the equation is equally compelling, driven by a confluence of factors. Firstly, Bitcoin is increasingly being recognized not just as a speculative asset, but as a store of value, often dubbed digital gold. This narrative has gained significant traction, particularly among institutional investors and even some governments, who are seeking diversification and protection against inflation and geopolitical instability. As more entities allocate capital to Bitcoin, this institutional adoption acts as a powerful validation, attracting further investment and increasing overall demand. The growing acceptance of Bitcoin as a legitimate asset class, evidenced by the development of financial products like ETFs, further broadens its accessibility and appeal to a wider investor base. Furthermore, the ongoing digitization of the global economy plays a crucial role. As more transactions and value transfer occur online, the need for a native digital currency that is borderless, censorship-resistant, and efficient becomes more pronounced. Bitcoin, with its decentralized network and robust technological foundation, is uniquely positioned to fulfill this role. The increasing adoption of cryptocurrencies for payments, remittances, and as a reserve asset by individuals and businesses alike contributes to a growing demand base. Network effects also play a significant part. As more users, developers, and businesses engage with the Bitcoin ecosystem, its utility and value increase, creating a positive feedback loop that drives further adoption and demand. Analysts point to several key indicators and trends that support the $1 million price target. The diminishing supply, coupled with growing institutional and retail adoption, creates a powerful bullish confluence. Comparisons to gold's market capitalization, adjusted for Bitcoin's unique properties and potential network effects, suggest a vast runway for growth. The increasing integration of Bitcoin into traditional financial systems, regulatory clarity in some jurisdictions, and the ongoing development of Layer 2 solutions that enhance scalability and usability all contribute to a narrative of sustained demand. The narrative of Bitcoin as a hedge against traditional financial system risks, coupled with its increasing acceptance, as a legitimate investment, suggests that demand is likely to continue outpacing the progressively tightening supply. This potential for massive growth is certainly exciting, but how are larger financial players actually accessing this market? We're now turning our attention to how sophisticated investment strategies are tapping into the crypto space. Ethereum ETFs fueling institutional Bitcoin exposure, a new allocation era. In a significant development that underscores the evolving relationship between traditional finance and digital assets, the emergence of Ethereum exchange-traded funds, ETFs, is creating new pathways for institutional investors to gain exposure to the cryptocurrency market, indirectly influencing strategies around Bitcoin. While the focus has been on Ethereum, the broader trend signifies a growing institutional appetite for digital asset exposure, leveraging regulated financial products to navigate this nascent asset class. This shift is reshaping how large-scale capital is allocated within the crypto ecosystem. The approval and subsequent trading of Ethereum ETFs mark a pivotal moment, signaling a maturing market that is increasingly receptive to digital assets. For institutional investors, ETFs offer a familiar and regulated investment vehicle, lowering the barrier to entry for cryptocurrencies. These products provide a way to invest in digital assets without the complexities of direct custody, private key management, or navigating the intricacies of crypto exchanges. The success of Bitcoin ETFs earlier this year paved the way for similar products based on other major cryptocurrencies, demonstrating a clear demand for diversified crypto exposure within traditional investment portfolios. While Ethereum ETFs directly track the price of Ether, their impact on Bitcoin and the broader crypto market is multifaceted. Firstly, they validate the concept of regulated crypto investment products, bolstering confidence among institutional players. This increased confidence can translate into greater willingness to explore other digital assets, including Bitcoin, through similar or complementary investment vehicles. The infrastructure and regulatory frameworks being established for Ethereum ETFs can also be leveraged for future Bitcoin-related products or enhancements to existing ones, potentially leading to more sophisticated and accessible Bitcoin investment strategies. Secondly, the allocation of capital into Ethereum ETFs can influence portfolio diversification strategies. As investors build positions in Ethereum through these ETFs, they may simultaneously reassess their overall digital asset allocation, potentially increasing their exposure to Bitcoin as the primary store of value or market leader. The correlation between major cryptocurrencies means that inflows into one often correlate with positive sentiment and potential inflows into others. This creates a ripple effect, where the success of Ethereum ETFs can indirectly boost interest and investment in Bitcoin, reinforcing its position as the flagship digital asset. Furthermore, the development of these ETFs highlights the increasing sophistication of crypto investment products. Beyond simple price tracking, future products might offer more complex strategies, such as yield generation, staking exposure, or even actively managed crypto portfolios. This innovation in product development caters to a wider range of institutional mandates and risk appetites, further integrating digital assets into mainstream finance. The ability to gain exposure to Bitcoin through various regulated channels, from spot ETFs to more complex derivatives or fund structures, provides flexibility and enhances the asset's liquidity and accessibility for institutional capital. The market reaction to Ethereum ETFs, coupled with the ongoing success of Bitcoin ETFs, suggests a strong underlying demand for regulated crypto investments. This trend is likely to continue, with more digital assets potentially becoming available through similar investment vehicles. For institutional investors, this means a more robust toolkit for building diversified portfolios that include digital assets, ultimately driving greater capital inflows into the crypto space and potentially influencing asset prices, including Bitcoin's trajectory towards new highs. The integration of digital assets into traditional financial products is no longer a distant prospect, but a present reality, reshaping allocation strategies and unlocking new avenues for growth. This integration of traditional finance with digital assets is a game changer. But what's the ultimate potential we're looking at? We'll wrap up with a quick recap of all the major stories and a call to action. And that's a wrap on a massive news day. El Salvador is fortifying its Bitcoin reserves with quantum-resistant strategies. SpacePay's Presale could be your next big crypto payment opportunity. Bitcoin's supply-demand dynamics point towards $1 million future, and Ethereum ETFs are opening new doors for institutional Bitcoin exposure. Don't miss out on the next wave of innovation. Hit that like button, subscribe to Bitcoin Bulletin for all your essential crypto updates, ring that notification bell so you never miss a beat, and drop a comment below to let us know your thoughts on today's stories. Follow us on all social platforms for more real-time insights. Stay informed, stay invested.